Greetings traders and welcome back. Thank you for joining me again. And if you're new, my name is Chris and I'll be your host today as we slide into another survival guide. Today's subject will be the E-mini S&P 500. This is the E-mini variation of the S&P 500, not to be confused. And it gives us a lot to talk about just due to the fact that the E-mini is such a popular indice. We've got an index here that has a collection of some of the most powerful stocks out there, and it is a very popular futures contract indeed. But before we get going too deep, let's go ahead and show you how you can pull up the E-mini S&P 500 on your charts using the Fitamark platform here. That way you can follow along looking at price as we talk about the E-mini S&P. So over here on the left-hand side, we're going to go ahead and click on our symbol finder and type /ES. After we do that, we give it a click, and we are good to go. We've had a lot of cool action with the E-mini S&P 500 today, and if you feel like you are on top of your game, make sure you check out our Gauntlet E-mini to give yourself an opportunity to prove your skills as well as potentially get funded. But let's dive on into the material. Here we go. S&P 500 E-mini futures. What more than a smaller packaged E-mini when it comes out of the factory, right? Well, what the heck is the S&P 500? Let's start with that. The S&P 500 is an American stock market index that was designed way back in 1923. I remember it like it was yesterday. It was initially named the Composite Index, but they realized that's not a whole lot of fun to say, and throughout the years, the index expanded tremendously to where we are at today, including 500 of the largest companies by market cap that are listed on the NASDAQ and the NYSE. Today, the broad-based capitalization-weighted index is considered a vital indicator of the stock market's health. At first, when the index was composed of fewer companies and the shares were cheaper, investors were able to purchase it directly. However, over time, as the number of constituents rose and their shares became more and more expensive, investing directly in the S&P 500 started to become very hard. This was the moment when ETFs and futures contracts came to the rescue to save the day. Today, investors can buy the whole market by simply purchasing an ETF or a futures contract directly from their broker-dealer. Nowadays, the S&P 500 is one of the most popular investable instruments worldwide. Even legendary investors like Warren Buffett struggle to find other instruments that deliver continuously and in such scale as the S&P 500. The most important thing to pay attention to with the performance of the index is that it is increasing over time. The figures that were produced by the S&P 500 from the period of 2009 to 2019 reached a staggering increase of 258%. That is legendary, folks. So that earns us a big old wow over here. Analysis has also shown that the S&P 500 index is regularly beating 95% of active money managers. That is a powerful statement. All that work, as well as the fee that we're paying to the money managers, and meanwhile just riding the S&P 500 would probably have done most people better. So we know about the S&P 500, the big daddy version. But now we're talking about the smaller version, this little guy over here, the E-mini S&P 500. The E-mini S&P 500 is an electronically traded futures contract launched and traded by the CME, which is the Chicago Mercantile Exchange. The contract represents 20% of the value of the standard S&P 500 contract. The E-mini S&P 500 is often referred to just simply as the E-mini, and that's kind of funny because it's not entirely accurate. There are other E-mini contracts on other indexes, such as the NASDAQ 100, the S&P Mid-Cap 400, the Russell 2000, and various other ones out there. But because of the popularity of the S&P 500 E-mini, it has been coined that when someone says E-mini, they're usually talking about the S&P 500. The S&P 500 E-mini contract itself has come a long way to become the most popular futures contract traded globally. The E-mini has the ticker symbol ES as we saw in the beginning of the video, and it represents one of the most cost-effective ways for investors to gain market exposure to the world's biggest companies by market cap, making it very handy indeed, especially to those investors that don't have a tremendous amount of starting capital. The E-mini was introduced in 1997 with the main reason of lowering the barrier to trading at a time when the value to cost ratio of the existing S&P 500 contract had started to rise exponentially. Suddenly, the index became too expensive for retail traders, which is pretty much all of us, and unfortunately, we didn't have a solution until, boom, 1997 arose, and we were given the E-mini to rescue the day. It quickly established itself as the most popular index futures contract on a global scale. And although the S&P 500 E-mini was designed to bring flexibility and affordability to the table, it is also a preferred investment even for the biggest of hedge funds as well. So it has an appeal for the small guys as well as the big guys. The average daily implied trading volume for the E-mini futures contracts is estimated somewhere between $100 to $200 billion. And these figures usually exceed the combined traded volume in US dollars of all of the 500 underlying stocks that make up the index itself. When it comes to the technical parameters of the E-mini S&P 500 contract, we should definitely note that the daily settlement prices are the same as those of the regular full-sized contract. This means that 5 E-mini contracts equal the financial value of 1 full-size contract. And in terms of functionality, the E-mini replicates full-size contracts in full. Both of these instruments are used for hedging and speculation, with the only difference being that the E-mini is used by all types of traders due to its affordability. This is an example of what the specs will be if you are interested in trading an E-mini S&P 500 contract. We know that the symbol is going to be ES. That's how we're going to locate it on our trading platform like we already did. The contract size is going to be $50 times the S&P 500 index. The minimum tick value, or the minimum tick itself, is going to be 0.25 index points with a dollar value of $12.50. That is $12.50. Trading hours, the same. Contract months, once again, the same. Nothing too crazy going on here. Other than that, if you ever are interested in checking out these contracts, be sure to check out our S&P 500 E-mini blog, because we do have all of this posted there as well. To understand the main factors that affect the price of the E-mini, it's always worth starting from the allocation of the constituents. The S&P 500 itself consists of companies in a variety of sectors with the following approximate allocations. We have materials representing 2.7%, real estate being 3.1%, utilities 3.3%, energy 5%, consumer staples 7.3%, industrial 9.4%, communication services is starting to get pretty big here, 10.2%, consumer discretionary 10.2% as well, then financials 13.1%, healthcare, 14.2. Would you look at that? Despite our terrible healthcare system in this country, it's doing wonderful in the S&P 500. Then we have informational technology as the biggest sector of them all, and that is going to be things like Apple, etc. And that is going to be, once again, 21.5%. So corporate announcements, industry trends, or third-party intervention like lawsuits or Facebook's industry-defining $5 billion fine that they received are the main movers of the price separation of stocks. Thus, the whole index itself moves as all of these individual things move. However we put aside these different factors, there are other factors that we should be aware of as well that we're going to cover here in just a moment. Other things that are heavily impacting and influencing the price of the E-mini S&P 500 would be the Federal Reserve policies, as well as the global economic relations and the political development. So we're going to talk about all three of these. Starting off with the Federal Reserve policies, this is one of the major factors that influence the direction of the market itself. By maneuvering between interest rates, the regulator can affect the actions of market participants and thus impact the price of the instruments. That's why most traders usually anticipate the Fed's statements on their plans for whatever interest rate hikes might be coming. For example, when the Fed issues a statement that it will potentially remain passive and won't increase the interest rates, The market is instantaneously affected in most cases. Investors usually assume that it is a good moment to abandon fixed income instruments and invest in real estates and stocks in search of higher returns. This shift usually results in a massive boost for the S&P 500 and obviously in turn the S&P 500 E-mini. Then we have the global economic relations. An essential factor for predicting the direction of the S&P 500 index and the E-mini, of course, is the state of the global economy and international affairs. Trade wars, military conflicts, economic sanctions, all of these events usually affect the market in a negative way, as many of the S&P 500 constituents are global companies with wide exposure and operations spread all across the world. The tech companies included in the index themselves usually rely on China for the production of key components in their products. Energy businesses, on the other hand, may rely on companies from the Gulf, Africa, or even the Middle East for the imports of petroleum. Consumer-oriented companies like Starbucks, for example, rely on Ethiopia, Kenya, and other African countries for the imports of things like coffee beans. Should there be a global conflict or instability within these key markets, the S&P 500, of course, would be affected. Then we have political developments. One of the key examples of market-moving events are usually the presidential elections in the US. The case is often the same. One of the candidates tends to be more of a liberal market policy favorer, while the other one generally tends to be more in favor of stricter regulations, more Republican-based. And during the debate session, the S&P 500 will usually react to every bit of news from both political camps. The index will start to experience more frequent price fluctuations when it makes it harder for traders to navigate the market and tailor to their trades accordingly. The reason is that the markets do not like uncertainty, which is precisely what presidential debates are all about. Finally, we have some smart trading tips to keep in mind as we dive into the E-mini S&P 500 trading world. The first tip is to always keep an eye on the liquidity and volatility levels. The E in the instrument's name comes from electronic and emphasizes the fact that the contract can be traded digitally and not in the old school way in the trading pits. A huge advantage of the electronic trading is higher and constant liquidity. Traders that buy and sell can do that more quickly in a matter of seconds or even million microseconds when it comes to those high frequency traders. This ensures constant trading activity, which is good for us. The futures contracts are so widely popular that during those periods of low daily trading volumes, sometimes it gets sporadic, so we want to pay attention to the liquidity. Occasionally, liquidity levels can drop, even though the vast majority of the time, the E-mini S&P 500 is known for its legendary liquidity. There was a time in 2018 when we had a massive stock sell-off, and that did affect the liquidity of the S&P 500, creating a very, very irregular trading session for many traders. Our second tip is going to be the S&P 500 E-mini can be subject to speculative trading. Since the E-mini is one of the most popular investable instruments worldwide, it is also a preferred environment for market manipulating traders or speculators. One of the most notable examples would be the flash crash that occurred in 2010 when a single seller sold more than 75,000 E-mini contracts. Essentially what happened is something called spoofing. The trader instructed his algorithms to change all of his trades shortly before their execution, triggering a massive sell-off caused by the fear of the orders to come and triggering something that lasted somewhere around a $1 trillion market value loss for the S&P 500, all because of one person. Our third tip is the S&P 500 E-mini can be suitable for all types of trading strategies. And despite this not being a direct tip on how to trade the S&P 500, it should be very comforting to know that due to the high liquidity and relatively low volatility, the E-mini S&P 500 paves the way for the application of pretty much any kind of trading strategy. This means we're able to use price momentum strategies through long-term holding to trend following and swing trading. No matter what we think of, there's a good chance that the S&P 500 represents a suitable market for it. And knowing that, if we are finding that we're not getting the success that we are interested in, there's a chance that we are probably doing something wrong ourselves. In conclusion, the S&P 500 E-mini is one of those beautiful futures options that is good for almost everybody. It's good for professional traders, including hedge fund managers, as well as beginning traders and the newcomers, all you newbies out there. It has a very high liquidity and relatively low volatility market landscape that make it somewhat predictable in nature. And I say that obviously with a bit of an asterisk at the end, because the market is the market. It is going to move. And one thing to always remember with the S&P 500, it's one of the instruments that does tend to react first to large global scale events. So it is something to be on the lookout for during turbulent global times. But other than that, if you feel you've got what it takes to master it, make sure you check out our Gauntlet Mini and give yourself a chance to prove your accuracy and become a funded trader. Other than that, thank you for joining me again, everybody. Please click the like and subscribe button below, and I look forward to seeing you in the next one. Have a good day, everybody. Over and out.